And let's talk a little bit where we're at in the market. So this was the beginning of the week, and basically what you see here is the blue line represents the S&P index. So these are indexes year to date, and as you can see, this beginning of this week we actually entered into what's called a bear market. Anytime the market goes down 20% or more, you move from what they call a market correction to a bear market. Now, is that going to stay there? We don't know. We've seen a little bit of a bounce back in the middle of the week. But right now the S&P, as you can see, is down 21.33%. The red line represents the NASDAQ index, and what that has shown us how much farther the tech-heavy NASDAQ index has gone down relative to the general markets. That's down 31% year to date. And when we look at the green line, what that represents is the bond market. Now this is where things have changed a little bit from history. Historically, the bonds, if the stock market was declining, the bonds would hold their value and continue to move kind of at least sideways, if nothing else. But you can see the bond market is actually down over 12% year to date. Double-digit losses in that, which requires us to really look at how we're going to rebalance portfolios moving forward. And the reason this is happening is because as interest rates rise, the current bonds that are out there at lower interest rates are going to be less valuable. So what I wanted to also point out, if you now go back and just kind of look at what's happened to the S&P over the last 3 years, you can see the dotted line shows that we've actually given back quite a bit of the gains that we've had since January 24th of 2021. So we're back about where we were back then. So that's a little over a year, almost a year and a half ago. But what I wanted you to really see is even though we're at 37.49 at the beginning of this week, look at where we were at the peak right before COVID. That's February 19th, 2020. It was at 33.86. We're still ahead of where we were during the peak growth years of the 2018, 19, 20 that we saw the huge growth in the market. We're still ahead of that. So anybody that's been in the market for longer than 3-4 years, they still should be ahead. But also look at where we were at the bottom of this COVID market on March 23rd, 2020. The S&P was at 2237. From that bottom to the top of January 4th, 2022, we went to 4888 or 4818, excuse me, in 26 and a half months. That's 116% growth in 26 and a half months. That's not sustainable. The market got overbought, and now we're seeing that sell-off to correct.